So the FTSE so far this week, being Thursday afternoon, is up about 100 points, about 2% on the week. The main features have been Spain still a continuing concern, and if you just move on to the first chart, if we have a look at that, then you can see this is basically a chart differentiating the three indices of the CAC, the French index, the IBEX, the Spanish index, and the FTSE, obviously the UK index. The FTSE and the CAC have been pretty much flat actually on the year now in terms of performance, but you can see the IBEX in Spain has been dramatically underperforming really since the end of February into the beginning of March, where it's now actually down about 20% on the year to date. You can also notice on this chart that the CAC over the last few days, if you just see the yellow line here which indicates the CAC, has just started to sell off. The main reason for that was earlier today and yesterday due to AAA downgrade rating concerns. Fitch, one of the US rating agencies, actually did come out and confirm their status and confirm it going forward as well. So that kind of pushed aside some of those concerns, and we have seen a bit of a bounce back this afternoon. Just moving through other kind of main features of the week, we also had China. Coming into the week, they reported their quarter-on-quarter GDP, which came in below expectations at 8.2% versus the expectations of 8.4%, 8.1 versus 8.4, which although doesn't sound a material miss, it does indicate that China still continues to slow down. Obviously, it was one of the main driving forces in the troubled world as we stand, so it is a bit of a worry. And the knock-on effect to some equities, as you can see on screen, is Burberry. They actually reported their results this week, and one of the main things in their statement was commenting on how they felt pressure of this slowdown in China. It's becoming a more and more attributable factor. They were down about 5% on an intraday basis, which is the largest fall in a number of months. Just moving through other equities, we had Man Group issued a performance update as well, which has been an ongoing concern really. Although it had been picking up through the last few months, we did see this concern back in November, December of 2011, and that has started to build momentum again. So the Man Group performance was down. The stock was down about 15% on the week, and I believe the performance was down about 0.3% since the previous review. There's also has been worries of a potential ratings downgrade of Man as an entity as well, which is just a further concern for investors. If we move over the pond, then to the US, as I mentioned in last week's podcast, we entered the US reporting season. So we've had, so far this week, we've had, to name a few, Bank of America, Citi, JP Morgan, and Goldman Sachs, which are all mentioned on this chart. Hopefully you can see them. White of Bank of America, yellow of Citi, green of JP Morgan, and the pink of Goldman Sachs. They did actually, all apart from Citi, beat expectations. Bank of America dramatically exceeded expectations, which really continues to be an ongoing trend. Bank of America have been outperforming, as you can see on this chart. They are the highest line here. There are other peers in the States. We're only about a quarter of the way through the number of companies reporting on the S&P, so we'll continue to look forward to those over the coming weeks or week or two. Coming back onto the domestic scene, Tesco, following their trading up to the profit warning back in January. They've been somewhat sideways trading since that point. They just reported to the market yesterday, in fact, so on Wednesday, and they reported marginally better figures with PBT, profit before tax, up about 1.6%. They also mentioned continuing further expenditure, and they fleshed out a little bit on they're looking to spend 400 million in the UK on capital expenditure. If we just move onto other big features of the week, in Argentina, a big oil company called YPF, which was basically 57% owned by Repsol in Spain, they actually got re-nationalised by the Argentinian government. It had somewhat been expected to an extent by a few analysts, but still a bit of a surprise to the market. You can see their share price chart here. They dramatically collapse really from where they were back in kind of a few days ago at $22, $23. This is the ADR, so the American Depository Receipt. So this is actually traded in the US despite being a Argentinian share. And likewise, because Repsol own this 57% stake, which will be diluted to expectations of about 6% once the government's passed the final vote on the 25th of April in Argentina. You can see a similar move in the Repsol share price. Quite a big knock for both of those oil companies, so a bit of a surprise there. Just sticking with the Argentinian theme, one of the biggest small cap movers this week was Borders and Southern. Really yesterday and today as well, actually, the move continued. They had been trading about 70p. For those that don't know, it's an oil and gas explorer based in the Falkland Islands. They're in the south of the Falkland Islands as opposed to Rockcopper, which obviously had success in the north of the Falkland Islands. They're currently drilling the Darwin prospect and are waiting for a result. According to the kind of company forecasts that have been put out there, we're due a result any day really. So they had traded in the last couple of days up from 70p up to about £1.25 at their highs. Finally, just touching on a commodity, natural gas actually. As you can see, it's been a continual loser since, well really, beginning of 2011, just a continual downtrend. The main reason for this, especially in the US, is due to shale gas. For those that aren't aware, it's a process called fracking, which basically involves pumping high-pressured water and chemicals down into holes between rocks, essentially, and the driving force of the water and the chemicals essentially should break the rocks and force the natural gas up to the surface. Now what this has done is there was actually a Bloomberg survey which was out this week. The stockpiles in the US have risen 25 billion cubic feet this week alone, which is obviously a huge quantity. Obviously the knock-on effect of that is gas prices have been somewhat falling through the floor in this time frame really. And also in the UK we saw a judgment this week from the government that will allow shale gas fracking procedures to be used in the UK again. There had been a year break since they were last used, and the main reason for that was 2 earthquakes were felt previously, last time they were doing it, so because of which a government environmental survey took place to just shore up for voters' concerns, I guess. So we shall see if hopefully that will provide a bit of a solution to the worries about UK energy concerns, but we will see what happens this week. As I say, we've got further reporting season in the US, and the euro will continue to see what happens in Spain and the peripheral European countries.